Gold and the other precious metals all made a sudden swing lower on what was practically the first full trading day of 2022, after the promising period between Christmas and New Year, when prices soared substantially. The beginning of a loss was seen in Asian and European markets, but prices quickly plummeted after North American markets opened, a trend that Bitcoin followed, with BTC sliding below $47,000 once again, despite US and European shares moving slightly higher after an overnight dip in Asian ones. The steep drops in precious metals seem to have been triggered by a good climb in the US dollar index to above 96.60, as well as a rise in US bond rates, but the oil price has also risen. After trading at roughly $1,830 and $23.30 respectively near the end of 2021, gold and silver both dipped below $1,800, with a minor partial rebound late in the day and early on Tuesday. However, they were not close returning to their pre-Christmas highs. In North American trading, platinum and palladium were also considerably down, with the difference between the two PGMs closing to just over $820, but there was a modest rebound on Tuesday morning when the dollar index fell back a bit. Investors in precious metals will be hoping that the recent declines aren't a sign of things to come. When the North American markets open later today, it will be fascinating to observe what happens to the pricing. The dollar's strength and the rate of inflation seem to be the two most important factors influencing precious metals prices right now. Some reputable economic pundits believe the dollar index is currently much too high and expect it to go down to around the 90 level, or perhaps lower. Given that the variables that should be weakening the dollar also apply to many of the rival currencies against which the dollar index is measured, this might be wishful thinking. Regardless, there is a strong possibility that all will fall versus gold, which is considered as a leading sign of economic instability. If this occurs, we may see a price rebound in silver as well, since it still follows the gold price. The PGMs, on the other hand, seem to have less of a link with gold prices, palladium in particular, and, as industrial metals, they are more reliant on economic development. Gold is also considered as a benefactor of persistently high inflation, since it retains much of its innate worth as a wealth defender in such times. With Fed head Jerome Powell admitting that inflation levels are no longer transient, it seems that we may be entering a period of prolonged inflationary pressure. He believes they are more likely to be higher and continue longer than the Fed anticipated. As a result, gold's performance may be determined by whether the Fed considers inflation levels serious enough to take a more aggressive stance on raising interest rates, a policy that tends to be gold negative, or whether it continues to take a cautious approach for fear of jeopardizing the current economic growth and unemployment declines. Low interest rates combined with rising inflation produce negative real rates, which, as we have already shown, is a condition that favors gold. When other investments seem to be more advantageous, the fact that gold is a non-interest generating asset tends to be a negative factor for the yellow metal. When actual rates go below zero, however, this limitation vanishes, and gold's reputation as a wealth defender rises to the fore. So far, at least according to official numbers, the era of high inflation has not lasted long enough to be considered a really sustainable time. However, with more analysts predicting that present inflation levels will stay stable, if not rise, for the foreseeable future, there seems to be a strong probability that this anticipated favorable impact on gold prices will continue for some time.